UK free trade deals will be tough for Irish exporters. The crystal ball is somewhat cloudy on the question of whether the latest Brexit deal will return the UK to business as usual. In the short term, the deal is unlikely to help the UK avoid a technical recession. In the medium term, a soft Brexit, with zero tariffs, will depend on a successful setting up of the technical details related to the EU customs union to avoid physical checks on the island of Ireland.For Irish exporters. This means less uncertainty, given that the probability of a no deal has effectively been eliminated. A rise in business confidence is expected, which should boost domestic investment in both the UK and Ireland. It had contracted over the past 2 years. Foreign investment should also gain momentum. However, as uncertainty slowly fades, the depletion of stockpiling, due to frontloading of imports into the UK ahead of the previous Brexit deadline of October 31, is expected to affect Ireland's exporters for the next 6 months. Consumers front-loaded their spending, as witnessed by the strong UK retail sales growth over the past few months, while companies accumulated high levels of stocks to offset potential import tariffs and customs delays. Consumers and businesses are now overstocked. The Bank of England reported that business stocks had reached their highest levels since the 2009 financial crisis. While the Bank of England is likely to have cut interest rates by year-end by up to 0.5%, economists agree that this would not be enough to prevent a liquidity risk for some UK companies. British firms have borne the brunt of the uncertainty and the higher financial costs related to Brexit preparations. International credit insurance agency Euler Hermes reported that business insolvencies in the UK are expected to increase 16% in 2020, up 5% on the current year, with consequent risks to Irish businesses. Thanks to UK companies and households' preparations for a no-deal Brexit, the EU tapped billions of additional export demand in the first half of 2019. Ireland's exporters benefited the most from this wave of contingency stockpiling in 2019, accounting for a third of the EU export gain. However, they should also be those to suffer the most from the negative destocking effects in the coming months. Sterling will most likely be the biggest winner from the Brexit deal, but it will remain a prisoner of the volatile political environment. The UK currency has been the main Brexit risk barometer since the 2016 referendum, losing, at one stage, 20% of its value. Most of the currency dealers now consider sterling to be undervalued and that the lower Brexit uncertainty should lift it against the euro by the end of 2019. In the previous version of the withdrawal agreement, the backstop would have forced the whole of the UK to remain in the EU customs union. In the event, for more on this story, visit the news article link.